And then, of course, always look for what I call cones of investment by the federal government. The government puts money in places where they want to grow.
Welcome to Unstoppable Podcast with Harry Sardinas, inspiring conversations with influential millionaires, investors, thought leaders, entrepreneurs who are making a massive difference with their innovative products and services, and sharing the challenges and the wisdom of how they sold their first million.
So, but 1 out of 5 are always property investors, property millionaires, and 1 out of 5 also tech. So these are the dominant industry, right? So why do you think that property is such strong vehicle to build wealth? Well, that's what statistics that reflects. And but is that easy? Tell us the good, the bad, and the ugly.
One of my mentors once told me, and you're absolutely right, it's easy to make money in real estate. It's hard to keep your money that you make in real estate. And that's where people, they get excited.
Because eventually something goes wrong, right?
Exactly. Are you prepared for not if, but when it's wrong? Mm-hmm. Now, the global financial crisis that really hit us hard in 2008, and it rocked a lot of the world, was a credit crunch. None of my investors who were under leveraged lost a penny.
Oh, wow. That's very impressive.
It was only people who were over leveraged. So the first thing you got to do is be disciplined. Think about
Dave, can you define over leverage so people can understand?
You know, in general terms, at that point in time, if they owed more than 50% of the value of their properties, they ended up having to sell those properties to pay the mortgages on their other properties. And then once that starts, there's a chain reaction, because then you have less money, but the debts are continuing to grow. And if you've got enough money in the bank that you can float your rents with no income for, say, 5 to 6 months, and that your debt does not exceed 50%, it's an arbitrary number, but it's one that we've seen work really well, 50% of the value of that real estate, then even if that real estate were to lose 40% of its value overnight, you can still sell it and make a profit. You just don't make as much. And that's where my savvy investors found themselves, is they were able to still sell properties and make money because they weren't over leveraged. I had a couple who were having to go to real estate closings where they would sell properties. They had to write a check. Not only did they not make money, they had to write a check. Now, that's not a good way to make money in real estate.
What your in investment, right? Where do you that is the best places in United States to do real estate investments, and why?
If I were to tell you that, I would be giving you yesterday's news.
Very good answer.
Nobody really knows. Now, the real estate cycle in the United States, and I would imagine worldwide, is very consistent and very predictable, not in timing, but in order. So I could look at this. I've been through almost 3.5, 4 full real estate cycles. And I can tell you that the first thing that starts to pop in a real estate cycle are your areas that are heavily populated and areas where there's a lot of pre-existing construction, because single family homes and already constructed properties are cheaper, and places that are populated are going to start their regrowth much more quickly. I know that then it becomes multifamily, and it starts to move into tertiary markets. Like when a lot of my investors left San Francisco in 2014, 2015. They made a ton of money in Silicon Valley. You know what they did? They did 1031 exchanges and followed this guy named Elon down to Austin, which was just a sleepy little college town. And now what's happened in Austin, Texas? It's the next hub for all kinds of innovation. So those are the kind of things that happen next. Commercial rebirths during that time, people start to look into formerly undeveloped areas because that's where corporate money goes. Whether it's Hyundai building a new plant in Birmingham, Alabama. And those are the kinds of things. And then, of course, always look for what I call cones of investment by the federal government. The government puts money in places where they want to grow. So if they're investing $1 billion to build a bioterrorism facility in Manhattan, Kansas, you better believe that's a good place to put your money.
Yeah, 100%. And then they tell us and this is important that you what you specific niche, finding your specific gap in property, right? I remember one a property investor friend of mine. We were working in London once, and then he told me we found he saw like $2 and he saw one house or one unit in the middle that was lower. I told me, Harry, you see this unit, this? So this unit in the middle, on top, it has something that called airspace. So what that means is that if you buy the property, you can go higher and build 2-3 floors as long as high as the between, because there is a law, there is a section that allows this. And of course, this 99% sure, when I'm 99% sure that the owner of this property doesn't know this. So sometimes this inside knowledge, this inside hack within an industry that you can build the business on, right? Or my one was, it might even was before Airbnb. I did this Airbnb when it started, we were doing this short-term accommodation for years, right?
Were you doing
Before they
Airbnb in
shop.
Miami?
Yeah. No, I was doing all this in London.
In London, okay.
In London, yeah.
Gotcha.
So what I said, we were even long before even Airbnb. Actually, when that recession happened, right? Sometimes the recession comes opportunities. So this is what we built my business in 2008, around that area. That's what happened. Everybody lost the job, so nobody could afford the rent of the full house anymore. So they only
Right.
can afford rooms, and then on the other hand, the landlord, they were all empty because of the same reason. Everybody lost the job, so they cannot rent their house anymore. So then I went to a landlord and said, look, if I rent your house, yes, you give me a good price, and then I will take care of it, and then I fixing up the houses, making very nice, and then I brought the tenants right the full house because they couldn't afford it by renting by the room. So sometimes, and talking about real estate cycle, that wasn't a specific cycle of the real estate, which is okay. You have a credit crunch, and I call it in property winter. The winter is when the houses are cheap out there, but everybody's so scared that the bank doesn't want to lend any money. And yeah, if you have money, it's good for you because you can buy a lot of property very cheap. But you need to have it in cash because because it's a recession, the bank is scared to give you the money because it's fear. So, and then but winter doesn't last forever. Then it comes spring, when the prices, the economy recover a little bit more. So then now some money comes. Yeah, the state that I hate most property is the summer, right? When prices are high and everybody are buying even more that the house is worth and things like that, which is actually happening in Miami. I've been told that when COVID, they opened the doors. Everybody, the whole United States came here to Miami because it was open, and then people were even paying even 40,000 on top of the property value just for buying because it was not enough stock, and everybody was buying like crazy, like the buyer's market. And again, we go to winter and things like this. So, Dave, which cycle do you think that Florida and United States is at the moment in the property cycle, and why, and how long do you think will take until we move to the next season?
Yeah, this is when this market is more of grinding to a halt rather than going off a cliff. And so it's made it a very interesting market because there really hasn't been a precipitating event to cause the downturn other than the post-pandemic inflation, which caused interest rates to rise. And that has created such a gap between wages and affordability that it's not just a question of I can't buy investment real estate. It's a question of I can't rent. And if I can't afford rent, investors are not going to buy rental properties. It's been 3 years since I bought a property. We're just sitting, keeping cash, gathering cash for when that time comes. Now, those are all signs of a very mature market. Commercial real estate went through its downturn. New construction went crazy. Now new construction has shut down. But with the latest moves by the federal government of the United States to ease money, to lower interest rates and borrowing rates, we're starting to see some rebirth. Every little point that that interest rate goes down, there's going to be more people who will be able to buy, more people who are able to rent. So if the Fed keeps their course, my prediction, right? It's free and it's worth every penny you're paying for it. My prediction is that over the course of the next year, we're going to see interest rates drop maybe another point in real borrowing. And when that happens, we will see the market not ignite, but we will see it start again.
Mm-hmm. It's a little bit slow now, right?
Well, yeah, there's places even in Miami. There's a lot of Miami that's dropped by 30%. That's a lot for any market.
Well, which one is a new construction or?
Yeah, new construction. Single homes are fairly stagnant. New construction, we're seeing builders offer all kinds of incentives everywhere. So, nationwide, I think everybody's just kind of waiting. There's a lot of pent-up demand. There's a lot of cash. We're just waiting. And what that tells me is that we're probably going to see the market start to move again next year. I just don't think it's going to be this meteoric rise.
Follow us for more interviews with world's most influential, audacious entrepreneurs that overcame challenges and adversity, providing you with the blueprint of how they sold their first million so you can grow your business exponentially.